So, big news out of India. On September 3rd, 2025, the government announced a massive overhaul of its GST system. We're talking about next-gen reforms that are going to change everything, from the price of your milk to the car you've been dreaming of buying. The big question is, what does this actually mean for you and your wallet? Well, let's break it all down. Now, the government is framing this with some pretty big words. They're calling it a citizen-centric evolution that's designed to enhance the quality of life for everyone. That's a powerful vision, right? It's a huge promise, so let's dig in and see what's actually behind it. At its heart, this is all about the government delivering on a core expectation, making everyday life simpler and hopefully a bit more affordable for its citizens. It's a major, major move. Let's see if the details really live up to that promise. And let's be crystal clear about this. We're not talking about some minor tweak or a small adjustment here and there. This is a fundamental restructuring of the entire GST framework, a complete overhaul. So, what's the one big mission behind all of this? If you had to boil it down to one word, it would be simplification. The whole point is to untangle the messy, complex system we have now and make it way more straightforward for absolutely everyone, from the person buying a bar of soap to the small business that's selling it. So, how exactly are they going to simplify things? Well, they're doing it by completely rethinking the tax rates and introducing what they are calling the simple tax system. And here it is, the single biggest change in a nutshell. We're getting rid of that confusing, four-tiered structure that was so hard to keep track of. The new system is built around two main tax rates for most things, which is just a massive leap towards clarity. But, as you're about to see, there's a little twist, a third special rate you need to know about. Okay, so let's break down this new three-rate structure. First, you've got the merit rate at just 5%. This is for your absolute essentials. Then, there's the standard rate at 18%, and this is going to cover the vast majority of goods and services. And finally, you have this special demerit rate, jacked up to 40%, and that one's for luxury and what are often called sin goods. All right, so all that theory is great, but let's get to the important part. What does this actually mean for your bank account? How are these new rates going to affect your weekly shopping trip? Just think about your daily routine for a second. Everyday things like soaps, toothpaste, hair oil, and shampoos, all of them are seeing their tax rates plummet from 18% all the way down to just 5%. That's huge. Same goes for kitchenware and even bicycles. And it's not just stuff you buy. Services like your gym membership or a trip to the salon are also about to get cheaper. And believe it or not, the savings get even bigger when you look at your grocery bill. Some staples are becoming completely tax-free. UHT milk and packaged paneer, they're dropping from 5% down to 0. And this one is pretty remarkable. All Indian breads, like chapati and roti, are going from a pretty steep 18% right down to nil. So the main takeaway here is that this isn't about just a few cherry-picked items. We're talking about tax cuts across hundreds of daily use products. The message is pretty clear. The goal is to directly lower the cost of living and ease some of that financial pressure on families across the country. But it's not all about groceries and toiletries. This reform also tackles those bigger purchases and, on the flip side, what the government calls demerit goods. This is a big one. A lot of those aspirational, big-ticket items that used to be stuck in that highest 28% tax bracket, well, they're now moving down to the new standard rate of just 18%, and that is a really significant price drop. So what kind of things are we talking about? Small cars under 1200 cc, motorcycles up to 350 cc, televisions, air conditioners, they're all part of this shift. For a lot of people, this is going to make these kinds of products much more accessible, much more affordable. Now, on the other end of the spectrum, the government is rolling out that new, much higher demerit rate of 40%. And this rate is aimed squarely at goods that are either considered harmful or are pure luxury. So things like sugary sodas, tobacco, and pan masala are going to get taxed a lot more heavily. And the same goes for big cars, yachts, and private aircraft. The thinking here is pretty simple. Discourage the unhealthy stuff and tax the high-end luxury items. Okay, so beyond what this means for you as a consumer, a massive part of this reform is aimed at making life way easier for businesses, especially for small traders and entrepreneurs. A huge step forward here is finally getting the GStat up and running. The easiest way to think about this is like a special fast-track tax court. For any business owner, you know that tax disputes can drag on forever, costing a ton of time and money. Well, the GSTAT is designed to cut through all of that and resolve issues quickly and efficiently, which should really help build more trust in the system. Getting a business off the ground is also about to get a whole lot faster. For small and low-risk applicants, there's a new streamlined process that promises GST registration in just 3 working days. It's all done online through an automated system, which is a huge deal for removing one of the first big hurdles for new entrepreneurs. And there's even more good news for businesses. The reforms are going to make it easier for small suppliers to sell their goods online across state lines. They're also clearing up some of the really confusing rules around things like post-sale discounts, basically getting rid of the gray areas that can cause so much headache. Whew, okay. We have covered a lot of ground. So let's zoom out for a second and try to put all these different pieces together. What's the big picture? So, when is all this actually going to happen? Well, mark your calendars. The new tax rates for most goods and services are set to kick in on September 22nd, 2025. That new GST act we talked about, it'll start hearing cases by the end of December. The only thing still up in the air is the new rates for tobacco and pan masala. Those will be announced at a later date. When you look at everything together, this whole reform package really boils down to 3 main goals. Number 1, lower the cost of living for consumers, putting more money back in your pocket. Number 2, make it drastically easier for businesses to comply with tax laws. And number 3, create a tax system that's just more transparent and efficient for everybody. The vision is definitely ambitious, and the changes are absolutely massive. On paper, this is a really strategic and bold move to simplify one of the most complex tax systems in the world. But the real question, the one that matters most, still remains. Will this new simple tax truly deliver on its promise of a simpler, better quality of life for every single citizen? I guess only time will tell.